Welcome, folks. So this is the market review for gold. So today we had two setups that were valid. So we had the London Open Killzone, and then we had the New York Open Killzone. So in the morning during London Open, we had this order block. This is a 1 hour chart. So we had an order block. We hit that. As you can see, we hit the midpoint of the order block right there, and then we had this move to the upside. So based on premium to discount levels, so we had this high to this low. This was premium. So whatever was at premium or above, we had this inefficiency, and also we had this small inefficiency right there. So we had two inefficiencies above midpoint, which is the premium. So on the 15 minute chart, we had a run on liquidity at exactly 2. So at exactly 2, we had a run on liquidity right there, and then we had this shift to the upside. So we also took out these lows right there as we traded into the 1 hour order block. So we had that, and then a shift higher. So that was the London Open Killzone. That is from 2 to 4 New York local time. So during the New York Open at exactly it was at exactly 7:30, we had this run to the upside. We traded inside this inefficiency. We also had an inversion, fair value gap right here. So either of them would have been will be right for you to use. So so we had this inversion, fair value gap right here, right there. Extend that through. So we traded into that. Also we had this. We traded into that, and then we shifted lower to lower prices. So this was in between the New York Open Killzone. So we had that aggressive sell, taking out these lows, and we also traded into, we had an inefficiency right here. So we traded into that, and then we had a shift higher, aiming for, this would also be categorized in terms of the ICT Silver Bullet, because it is in between 7 to 10. So here we were at 9:30, trading inside that inefficiency. So we could be aiming for at least 50% of this dealing range, which we equally hit right there. So we hit that, and then now here we are trading inside this area. So we could call them three entries, but majorly we had two, which were we traded. So we had also we hit on this order block right here. As you can see, we hit the opening price of that order block. So we had that as, you cannot mark that. Let us mark that instead of the imbalance. So we hit the opening price of that 15-minute order block. So if we head over to the 1 minute chart and see how we could have framed those entries. So we start off by the London Open Killzone. So here we were. So we had a shift in market structure after taking out sell side right there and trading into the midpoint. Look at how the candles respect the midpoint. There was no candle close below the midpoint, so that shows that price is actually really bullish for it to trade inside and close below the 50% of this inefficiency. So we had that. We had a shift in market structure right there, and then it left us a fair value gap. So there were two ways that we could have traded this. We had an inversion fair value gap right there, which was hit prior to this price coming back to this inefficiency. So you could have gone long inside that and anticipate for a run above these equal highs. So we had that during at exactly 2. At exactly 2, we had this run on liquidity right there, and then we shifted higher. So this would have been your entry right there, and your stop be placed just below that low. Aiming, your first targets would have been these relative equal highs. That would have given you a 4.04 hour trade. But if we head over back to the 15-minute chart and we mark the 50% of that dealing range and see how far it could have gone. So here's the fee bankage to that high and that low right there. So we had that. So this is 50%. So this would be your first target, 50%, which would be 5.17 hour trade. So you had that, and if you could have held for maybe anything above 50%, this could have given you a total of 8.26 hour trade. So you had that during the London Open Killzone. So let's go back to the 1 minute chart. So that's for London, and then here we had the New York Open Killzone. So we ran into the inversion fair value gap right there, and then we came back again, took this high, and then now here we had an inversion fair value gap as well. So we had that, and then so this was the inversion fair value gap. Here it is. So at first price came, passed through it, and then later came in back again and traded into that. So that could have been your entry short, and your stop be placed just above that high right there, because we have already taken out this high. So it is very low probability for price to go back in there. So we had that. The drawn liquidity would have been these lows. We had these lows right here. So we had these lows. So that could have been the drawn liquidity right there, or the midpoint of that order block. So that would have given you a total of 27.76 hour trade. So that was it. And also here we had this. So this was for those who are aggressive with the entries. So we had these we traded into these, taking out those lows right there, and then trading into this order block, and there was an inefficiency. if you can remember, on the 50-minute chart we had that. So here we had that. So as this candle was moving back, so you could be going long in that and then placing a stop just below the midpoint of this week, and trusting the fact that we are going to move at least above this high and the midpoint of this dealing range. So we had that. So if you were to go long, could be going long into this candle and then placing your stop just above the just below the midpoint of this week, and then you anticipate for a run on liquidity. So that would have been 4.89 trade. So those were the trades that we had today. It was quite a fruitful day. We had no news releases today, so today was a good day to trade when you don't have news events. So I guess that's it for today. So let me add on something here. We had this is a breaker, so we had low, high, lower, low. So this low took out these lows and the other lows on the 15-minute chart, so that automatically becomes a breaker, a bullish breaker. So while we are down here, we could anticipate for a run and then we hit the breaker like we did here. So you mark the most up close candle right there. So that would have been your breaker. Mark that. As price was hitting that, you could be going long. So we had exactly that. We hit that right there and right there, and then we had this move further to the upside. So if you take your fib, anchor it from supposed to anchor it from this low to that high, and then so as you can see, we had these projections. So this will give you your targets. So we had these in alignment with this high, so that would have been a very nice target for you. So you just place your targets there, and then we hit that immediately. So that was it for today, and until I talk to you next time, be safe.